Hello guys, are you struggling with growing your trading account? You make profit, you lose, you make profit, you lose, or you fund your account, you keep blowing your account over and over and over again. If that is your challenge and you're looking for how to grow your account, then this video is for you. And this is Soji, and you are welcome to Soji Forex. In this video, I want to look at 5 rules for growing your small trading account. 5 rules for growing your small trading account. Number 1 rule is trade with the trend. Know what is your market structure and how do you do that? You can do that by using your technical tools to determine whether you are in an uptrend or a downtrend. Okay, trade with the trend is our rule number 1. And what is our trend? To determine the market structure. So if you are using a technical indicator, you are someone that uses a trend line just as I've drawn, you should know that whenever price break out of this trend line, retest just as it does, retest and continue to the downside is a break of structure. Then you know that the trend have changed. Okay, and if you are someone who understands very well, you agree with me that this market has been making higher high and lower low. We have a low, we have a high, we have a higher low here. Okay, we have a higher high, we have a higher low, we have a higher high, higher low, and a higher high. And suddenly we have a break of structure to the downside, which means if I have been buying, I've come to the end of my buying and I'll be looking for a sell opportunity. And from this place now, we have a high and here we have a low. And here now we have a lower high. And if this continue to the upside, it means this down is our lower low. Structurally, you will now be looking for opportunity to sell. And if you are a trend line trader, by now you should know that your trend line is to be drawn this way. So you are expecting either the market break, which will be a break of structure again to the upside, or the market will move in this direction to give you another lower high and then create another lower low. So number 1 rule, always know your trend and trade in the direction of your trend. And for you to make your entries, always make your entries for a sell at your premium zone. Make your entry at your premium zone. For now, we have a break of structure based on this 1 hour time frame for a sell. And what do we do? Pick your Fibonacci tool, draw your Fibonacci level, and what do we do? Any level from 50 is your premium zone for a sell. It's a premium zone for a sell. So just as we have here, if you should have made this entry because of this rejection, it's your premium zone for a sell. anything 50 and above you can sell because it's a premium zone, right? So we have 50, 61, 78.6. You can look for any of your entry trigger. Here there is a fair value gap here, an imbalance. So if I am to trade this, I'll patiently wait for price to come and refill this zone. Why? Because if I am taking it from 61.8, my stop loss will be above here, and that means I will not be risking too much compared to taking it from the level of 50. The number two, always set your stop loss. Always set your stop loss. So based on this our fib level, if we were to make our entry, like I said, if I am the one taking this trade, my stop loss, I would prefer to take the trade around the imbalance. So I will wait for price to come and fill in the shaded portion I just, but the imbalance is on this 1 hour candle, so I want price to come and fill, then I will sell from there. And if I am selling from there, it means my stop loss is around that zone. Yeah, I'm trying to figure out how to show up my stop loss and my take profit. Great. So it means my stop loss is going to be from this red zone to the upside, while my take profit is going to be from here to the downside. So my stop loss will be at the previous higher high. Why? Because if the trend is going to maintain its new direction, which is as a downtrend, is not expected to take up the previous high where it is coming from. Alright, so always trade with your stop loss regardless of what you are trading, either boom or crash, against the spike or not against the spike. Always remember, the goal, number one goal of trading is capital preservation, and if you don't lose your capital, believe me, you must definitely make profit. So you let your number one goal be capital preservation. Then number two, don't have more than a single trade at a time. Don't have more than a single trade at a time. Remember, you are trying to grow your account. So do not see a signal on 1000, you now jump and said, oh, so let me go to my Euro USD and look for a signal there. No. And then you jump over to Euro USD chart and then begin to look for another trade while you already have a running trade on another asset. Your goal is to grow account. The danger of it is that maybe you are losing from there and at the same time you are losing on your new trade. It means you are going to have two losses at a time, or you make profit there and lose here, which means you just lost what you made. So it is very important, before you take any risk, always consider how much you will lose if the trade eventually go against you. So rule number two for growing a small account, rule number one, I beg your pardon, trade with the trend. Number two, always use your stop loss. The goal is capital preservation. Then number 3, do not have more than a single trade at a time. Alright? And even on a particular asset too, do not have a double entry. Avoid double entry. You are trying to grow your account. Alright? Over time, when you are finished growing it, you can do double. It's just like a building. At the foundation, there is nothing on it. But once the foundation is solid, you can have a 2 or 3 story on the foundation. So that's so we move to rule number 4. Don't be greedy. Rule number 4, don't be greedy. Always take your profit when due and when necessary. Whenever you see that emotion want to set in, you can take your profit. And remember, every trade that have a stop loss will always have a take profit. So do not be greedy. Don't feel you have hit TP, you now decide to say no. This TP that I just hit, yeah, I need to go back again. Let me enter second entry. Do not be greedy. Another way of being greedy is that when the market has left you, do not jump in. It's just like jumping into a moving vehicle, and two things will happen. It is either you enter the vehicle safely or you fall off and get crushed on the road. Just like this entry, I've done this analysis yesterday and I was waiting for price to return for me to go with this double bottom, but unfortunately I was engaged. When I return, I already see that the market has gone. Should I jump in? No. Why? Because the market is always there. Anytime you lose an entry, always find another entry. So remember, greed is one of your greatest enemy in this market. And let me add it up quickly that whenever you lose a trade, do not go on a revenge. It's just like robbing a bank and going back to the same bank. So please do not go on a revenge against the market. It is not every entry that you make that will end up being profitable. So your advantage is knowing what gives you profit and repeating those things consistently. That is why we share with you our proven strategies on this channel, where you can practice and trade with it, because we have backtested these things over time and we have seen the result it produces. So please, you do not need to go on a revenge against the market. Then rule number 5, have a trading plan. You need a trading plan. You plan your trade and you trade your plan. And what does that mean? It simply means you have to determine how much profit you want to make in a day and how many entries do you intend making to arrive at your profit. Just like you make budget for everything, trading is a business. It has to be planned, and part of those plans is that you plan your trade. Let every of your trade be planned, and then you follow suit accordingly. And what am I trying to say in essence is, if your goal is to make $50 in a day, once you hit your target, you want to make $50, good. How many entries do you want to have? For instance, you want to have 5 entries, or you want to have 6 entries in a day. And those 6 entries, let's assume your risk to reward ratio is 1:2. And you are targeting that each of them should be able to give you at least a $10, and you decide on how much you want to risk. You calculate it, you plan it, and you execute. After your 6 entries, if you were unable to arrive at your goal, your plan for that day, you exit. And if you are able to reach, all thanks to God. So please plan your trade and stick to your plan. Okay, just like what we are having here now, we are having a bullish market. Previously, we are having a higher low, higher high, higher low, higher high, higher low, higher high, and now we are having a break of structure, which is now giving us a low, a lower high, a lower high, and here now we are having a lower low. Right, so this market has returned up here successfully. And then let's use our Fibonacci to see what is happening. Let's see. Okay, so you can see that presently price is around the zone. This is a break of structure already, and we're having a retest, and price is around close to 78.6 level. So now that price is here, if we are to make our entry here, our stop loss is going to be above here, and our stop take profit is going to be down here. So we'll move to our 15 minutes. Here we are, and then we are waiting for an entry signal. So what is going to be our signal? We want to see, perhaps we will have the market come down, give us a break of structure, and then when it break, we look for an entry signal to mitigate and take us to the downside. Alright, that is one. So that is what we are hoping to get, as the case may be, or we want to see a double top formation, double top, and then we are down to the downside with our candlesticks confirmation. So depending on the entry level that suits you, but that is what it is. But because the price is in the zone does not mean we are going to jump in. We want to see a sign of reversal, and you can see that in this level there is an imbalance all the way from here, and already the price have filled that part of imbalance. So we are expecting a possible reversal from this zone. Maybe You never can tell, but let's see how it goes. Thank you. I believe you are getting value from this video. Please do not forget to like, share, and subscribe to our channel. See you in the subsequent video.